We've had an incredible pop in the markets following the FOMC meeting. What exactly should we be watching now? Let's talk about it. I am Dr. Stock, Doctor of Education, and I saw a dog walking down the street the other day. I said, "How's it going, man?" He said, "It's been a little rough." All right, we're going to talk about SPY, QQQ as usual. I'm also going to toss in there Tesla, Enphase, and AMD are the companies that I think have technicals that are absolutely worth watching. So let me put this up here for you. This is the rising wedge pattern that I've been talking about. And I will say leading up to the FOMC meeting, let me zoom in here and I'll tell you what potentialities I was talking for and what exactly we saw from it leading up to that point in time. Originally, I talked about a possibility for a head and shoulders pattern coming in here. And then I talked about in the pre-market hours in my one video, my last video on this, that it was looking like we might end up breaking that shoulder. And then, well, we heard from Jerome Powell and the markets just took off. And then you see that rise. So if we look from there, where we're at right now, we're actually hitting the top of the rising wedge pattern. So it is possible that we could expect some weakness coming up for SPY in the near future. Although we'll see if we hold this level at about 522. If we break the top of that rising wedge, then we have it as support. So that's also something that we can watch out for, that there could be further upside taking place from that. So that's something that we can watch for SPY. If we do sell down, we have support coming down at about 518 all the way down to this bottom trend line that we have right here. We have yet to break out of that rising wedge pattern, so we're still in bullish territory, being above the 50 and the 200-day moving averages. This is the 4-hour chart that we're looking here, also being inside this pattern that we're good until we break through the bottom of it. QQQ, with big tech being highly influential, what we see in this one is part of a rising wedge pattern as well. I'll jump back out to the 4-hour chart. Let's reset the view. And you can actually see a little bit more of that rising wedge. We've actually broken out from it. However, we've moved into trading sideways. Peekabooed out of it yesterday in the market and then had an engulfing candle bringing us back down into this territory. So let's zoom in there. There we go. Now we can see it a little bit better on the screen, and we'll see should we pop back up above the 446 line that we have right here, or if we're filling out what looks like it could possibly be a little bearish flag pattern where we start to drop back down and settle going into the weekend, setting us up for the next trading week. Well, let's move over into Tesla to see what's going on there. For Tesla, this drop that we get, this is from softening delivery numbers coming out of China, 6% down from the previous year's quarter for their deliveries. So that weakened demand for EV and that ongoing persistent negative sentiment that we have. If we break down below 166, we have the trend line down below that at about 158. And we also have the previous low that we had right around 160. So we could possibly see a further give up from here if we break the support that we have at 166 through the trading day today. And remember, I have a video out there about Tesla possibly making the case that we could see that drop down to, maybe even back down to $100 a share if things, if the outlook is negative enough for Tesla. And being a long-term investor in Tesla, I will dollar cost average on the way down. I will use options on the ways up or down just to play that market volatility in the interim in order to build out my cash position and allow me to invest in more shares in companies like Tesla. Now, something else that I've started to dollar cost average into. Oh, by the way, let me move on. Before I move on from there, we are in a descending wedge pattern right now. We can break through the bottom of this and keep falling. If we do happen to find support down here and we end up breaking through resistance, that can be an incredible reversal pattern. I think sentiment would likely have to change pretty strongly in order for that to happen. So this is one of those things I'm watching closely. We have this bigger bearish flag pattern that so far hasn't totally played out. We had a smaller bearish flag play out, and then we found some decent support, but then the delivery news that we got ended up bringing us back down during this last little leg. So we'll watch and see if we end up retesting support down at these bottom trend lines that we have on this 4-hour chart that we're looking at. Moving into Enphase, I have begun dollar cost averaging into Enphase, and right now we're in ascending triangle pattern. So this is one that if we keep on finding support down along this bottom trend line, as long as we don't break that and we keep on putting pressure up on this top trend line up here all the way close to 140, this is at about 138. If we continue to put pressure on that, the bulls could take over and we could push back up and see a golden cross moment coming up for Enphase. And with the FOMC putting out their summary of economic projections with somewhat softer than expected numbers, we expected a little bit more of a punishment coming out of it, and then it never happened. And Jerome Powell even came out sounding pretty dovish on things overall. That leaves way for things like small caps and for the interest rate sensitive stocks such as solar to possibly push us back up into that higher territory. And so this is one, if we go out, let me reset the chart view, you can see the sort of path that solar has been on, not just for Enphase, but they're down to about a third of what they were worth at their peak. So this is one that I think is going to come rallying back for us. We got to watch and see if we get that golden cross moment. That implies that, let me collapse that so we can see a little bit more of the chart here, that we can break over this 50-day simple moving average that we have in the first place, this high wick that we have here, showing us that there's some sellers coming in, some sell pressure that we have. They had the double top, sold us off to the bottom of the trend line here. And so we need to see that break over 50. If we do, then the 200 is next in line right at about 126. We need to be able to break that, retest it, and then I think after that we could find that we're breaking this resistance that we have right across the top, right about that 138 level. Like I said, I have started to dollar cost average into Enphase, and I'm looking into possibly taking an options position while we're down near this bottom trend line, some call options to take advantage of some possible potential upside that we have moving on for Enphase. So AMD is the next one I think is really interesting to look at, and I'll wrap things up here for you talking about what I see for AMD. And we are in this broadening wedge pattern that we have right now. So the volatility is increasing for AMD as the uncertainty goes on. We're down towards the bottom of this. If this support holds, we could have some significant upside for AMD, especially as we have had that run in other tech where AI is concerned, and AMD has just sold off instead, while NVIDIA continues to sort of hold sort of the lead for that, which I believe that they are the lead in the infrastructure play, and that's why I cover them so much. AMD, however, I think is getting to the point now that that they're looking for a nice little rise back up off of this. This could set up for a nice short-term increase in price, and with that price appreciation, maybe some call options would be appropriate. So this is also another one that I think that you should absolutely be watching right now. So Tesla, possibly short in the near term, and Enphase and AMD possibly long in the near term here. We got to watch those trend lines. We have to have our stops ready to go. That if we do our own research and our due diligence, I never tell you what to buy or sell, but those are things that you want to make sure that you're protecting your downside, especially if you're using options, because they move absolutely and incredibly wildly. I had some short hedges out just in case the FOMC meeting went poorly for the markets and the markets sold off. That would have been something that protected the downside. Instead, I ended up cutting those loose before any further loss from that short hedging, and allowing my long positions in order to appreciate along with the market recovery. And so that worked out pretty well with a very mitigated loss from those stops that I had set in place. Well, guys, I'm going to let you go for now. If you want to see more of what I have, check out the link for the Patreon. Check out my buys and sells that are there. Talk to me and my community members throughout the trading day. Also down there, if you want to learn to do technical analysis like I do, there's a link down in the description for the technical analysis trading course available through Stockmo Academy. I even have a chapter in there on options myself. It is totally worth your time and effort and energy, and really you can learn how to boost your trading game using that technical analysis trading course. Thank you guys for watching. I appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.